Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah, and over the next 22 minutes, we'll talk about two key aspects. One is a small opinion that I want from our guest today, because our guest is as frank as they come. And the opinion is on the reportage of the mutual fund flows that come in, because there's a wide difference between gross and net. Some hearsay, some declared numbers, at least the month of June was declared numbers. I would love to know her view on that. Of course, she is the CEO and MD of the house which runs a mid-cap fund which has had a very long history of success, and therefore would love to understand what would constitute or what would go behind identifying what could be a long-term success in the mid-cap space on the mutual fund side. Radhika Gupta Johnson on the show today. Radhika, great having you. Thanks so much for joining in. And I omitted a third part, which I'll talk at the end of the show, Radhika, about why is it that after the mango season is over, that the lady is wearing a mango-colored sari.
Good to see you, Neeraj.
Yeah, we'll talk about it at the end for sure. But Radhika, a slightly, not an unpleasant, but I was perplexed because, yes, it stays for a while, but today I saw a depiction of some reported numbers. Now, I mean, they're not official, because my colleague Anne tells me that the official data that was released by Amphi was in the month of June on the call, when they said that the gross number was an X number, 20,000 crores or whatever it may have been, and the net number is lower. I presume that's true maybe in some fashion, if not the exact degree, for the remainder of the months of the current calendar too. I really want to know, because we kind of report when we see those numbers, right, that we are seeing 20,000 crores worth of SIP money coming in every month. I mean, realistically, that's not right, because it's not 20,000 crores, because there's stoppages, cancellations, etc. The net inflow is lower. Why not report the net number?
So, look, this is a little bit of a tricky subject. You have to break down this number. Now, gross SIP is, say, I'm doing a lakh a month SIP and I'm registering it as Radhika Gupta. I report that. That's your gross SIP flow. Now, that SIP goes into a folio like Edelweiss Midcap Fund. And, eventually in that folio, I accumulate 20 lakhs by doing an SIP. And I start redeeming from the folio, or I start stopping my SIPs, and a net number is reported. So, by the way, Neeraj, I think all of us have always known and looked at this SIP number with that lens, because otherwise the math doesn't add up. On monthly basis, the net inflow into mutual funds is 25-30,000 crores. Gross SIP is 20,000 crores. I mean, more than that comes in NFOs, etc., etc. Now, is this gross and net, should net be reported? I think it should be reported. I think a lot more data in any way, reporting is a good thing. What does this, in fact, by the way, on a different note, I think flows should be bifurcated into retail and institutional flows, because a lot of times the media reports equity numbers and you don't realize a lot of the ETF flow is institutional. So I'm all for more transparency and reporting, because these days I think the amount of interest in the number and the fact that this data is used for a lot of decision making, I think we can do more transparency in reporting. It's always welcome. What does it indicate? I think what it indicates is this, that people who are doing SIPs into funds are also redeeming from those funds. Now, some of that, Neeraj, is natural. I did an SIP towards a goal to buy a house, and eventually I redeemed from that folio to buy a house. But I also think SIP funds tend to be your more vanilla funds. Now, the unfortunate part is people are redeeming from those kind of long-term investment folios, and half the money coming into the industry comes in sectoral and thematic funds. So people are veering a little away from my favorite word, dal chawal, into exotics, and redeeming out of dal chawal to do exotics.
No, sorry, just one follow-up there, Radhika. But, in some sense then gross, sorry, and correct me if I'm wrong, but in some sense gross then becomes a bit of a meaningless number, right? Because yes, you are reporting gross, and yes, all of these conditions are there, but on an average, every single month, if the net number is half or 60% or what have you, might as well show that as a current depiction. I'm just playing the devil's advocate here.
I actually think you should look at both. Like in my own business, I'm also the CEO of a business. I look at our gross equity flows, because that gives a sense of whether people are selling my product. right? If my gross flows are increasing, then that gives a sense that more and more people are buying my schemes. But finally, I make money, I make revenue. What stays is my net flow. So I actually think you have to look at more both. I think a gross SIP number indicates that more and more people are participating in the SIP story. The number of SIP accounts is going up. That's good. It represents a widening, because one of the things our industry also needs at 5 crore folios is a widening of the consumer base. So to me, gross represents that from a business point of view. Net finally represents the retention. Now, Neeraj, it's not that the net number has not grown. Even in the data that you sent me, the net number has also grown from some 5 odd thousand to 8 odd thousand. So it's not that the net number has not grown. My point is you need to look at both.
Got it. Yeah, I completely agree. And in fact, in some sense, I felt that because the net number has now grown to what a gross number was 2 years or 3 years ago, right? It's a comfortable situation. I mean, just that the correct reportage. It's just, I mean, at times I feel that when I'm arguing with somebody and talking about it, that look at the Indian markets, they are standing on 20,000 crores of sticky SIP inflows every month. Just factually, that is not correct now because it's not 20,000. It's about 9, 10,000.
The better way to look at it is this: how much net equity flow comes into the MF industry every year? Whether it comes via SIP, whether it comes via lump sum, does not matter finally. That number, I think, is usually 3.5 lakh crores. And then, of course, I add money that comes into AIF, PMS. That 5-6 lakh crore is the demand for equity that comes in every year.
Right.
By the way, contrast that to supply. That is, I think, a better way to look at it.
Agree. Okay. Uh, it's great. In 2 or 3 questions, we kind of agree on the same point, which is always good. But yeah, it's a topic that is up for debate with other opinions coming in sometimes. But I'm glad we see eye to eye on this. The other question, Radhika, that I have for you is this, right? We were looking at the flows that have come into mid-cap, small-cap funds, or how have you, and what some of the mid-cap funds have done over the years. Now, there's this data point put out on a social media platform by somebody, which highlighted that as of August 18th or 19th, which are the funds which did really well over a really long period of time in the mid-cap side. Your name features that, but that's incidental. I just saw that Motilal Oswal, Kotak Emerging, Quant, you, HDFC, all have done really well over a 10-year frame. I would love to know, Radhika, because it's great for people to come in via the SIP route or the direct route and stay invested, because if you can make 10, 15, 20% for 10 years, then it's a serious wealth creation. What goes behind identifying what could be a mutual fund scheme that could deliver for a really long period of time?
So, firstly, I mean, we've run this mid-cap fund for the last 15 plus odd years. It's our oldest and most flagship fund. But I do want to spend a minute talking about the mid-cap category, because I think there are myths in the mid-cap category. And I think the mid-cap category, it might be a little bit of a misnomer, because if I told you the average market cap of companies in our mid-cap fund is 58,000 crores, that's about 7 billion US dollars. These don't sound like mid-cap companies anymore. So one, you have to remember that the mid-cap category is very unique in India, because it effectively represents the next 150 companies after the top 100. That's SEBI's classification of mid-cap. And by the way, in our mid-cap fund, we don't do the thing of taking cash calls and hiding in large caps. And, so we are very clear that when we run mid-cap, we run it like mid-cap. But I think mid-cap is a very sweet segment for investors, because it is companies that they're not emerging companies anymore. They are market leaders. They are established business models. I mean, the universe today starts at 20,000 crores, goes to 70, 80,000 crores. But they're not companies that are so large that the growth alpha and the juice has gone away. So I actually think the next 150 companies in India that comprise a majority of these funds is a very big sweet spot. In fact, I keep joking, it's not a very popular opinion, that if you look at the 10-year return flashing on your screen of mid-cap funds, net of fees, that is a return that is very hard to beat by even many, many unlisted funds. I mean, funds catering at 20%, Neeraj, post fees and not a little bit less than that post tax, that's a pretty hard number to beat. So I think this category is a very nice sweet spot. I almost think it's a little bit like Goldilocks. Small cap still has a set of risks. Large cap is a little too big. Mid cap, in my view, is the just right category.
Okay, so okay, and I completely agree, Radhika, that 20%, even with fees, is a very difficult number to beat. Net of fees is extremely hard. How does one identify? I mean, 10 years back, I didn't know that the Edelweiss Midcap can do what it does. Maybe 3 years into that performance also, I might have thought that, oh, can I shift to somewhere else? Similarly for Quant, similarly for Moti, similarly for Kotak. And there are others who may not be 20%, but even 16, 17% is not a bad number. How does one identify? How does a viewer listening to you right now, what are the checks and balances? What are the tools that he can or she can use to identify that, okay, this might be a fund which is poised to give good returns?
So I think in this category, there are a few things that I would do, and I invest in this category quite a bit myself. One is that midcap is a stock pickers business. So really, midcap is about how the fund is doing stock picking, and you have to spend time on the investment strategy. For instance, in our fund, we have a well-established FAIR framework where there are three cornerstones. Forensic analysis is very important because this is the mid-cap category. Pricing is very important because you have to pay the right dollar, and robustness of business model is very important. So I think understanding the investment strategy is extremely important. It's a very basic thing to say, but I think it is extremely important because mid-cap is a stock pickers category. Second is, I think the construction of what comprises a mid-cap fund is important. Now, people have very different approaches. As I said, we don't take cash calls. When we want to do mid-cap, we want 70% of the portfolio to be mid-cap, and the balance is emerging mid-caps, which is small. Some people have large cap exposure. Some people have, all kinds of things going on. So for us, mid-cap means mid-cap, and I think that's one of the reasons that has worked. Liquidity, I think, is very important in the mid and small cap space. I know SEBI has been talking about it since March, but since the beginning of our history, I think having high liquidity conditions in mid cap is important because in mid caps, the key is you don't want to catch falling knives, and when things go wrong, you want some amount of protection. So mistakes in mid cap can be very, very costly. So I think liquidity is important, and liquidity is good in good times and disappears in bad times. So I think liquidity is extremely important. I also think, and Neeraj, this has been my rant, people are very obsessed with short-term performance these days. I like to look at one performance metric. If you want to look at one performance metric for a mid-cap fund, look at rolling 5-year returns because you're not investing for less than 5 years, but rolling returns gives you tremendous consistency. So I feel less happy when our funds rank well on these discrete return metrics that you put up, and better when they rank up on rolling returns. So I think these are the four things. Actually, if you look at rolling returns, you will be pretty accurate.
Okay. One quick follow-up question there, Radhika. There are a lot of people who come in, rightfully so, talk about looking at slightly difficult to calculate, ascertain ratios, the Sharpe ratio, so on and so forth, etc. Have you gone into those? I mean, they might make you an even better investor, sure. Maybe not. I'm just trying to understand. But do you make use of those ratios as well when you're going to choose out those funds?
Basically, I look at how volatile the fund is very quickly. So I am not too much of a ratio person. As I said, I look at how volatile the fund is. I look at extremely bad years. What is Sharpe ratio? It's a way to indicate how much risk you're taking. So, Sharpe ratio feels very vague to Indian investors. I like to simplify it. I look at periods of extreme drawdown when markets have done badly. How badly have these funds done? So I tend to look at that. But rolling returns, Neeraj, captures everything. So if you take the 5-year rolling return, the average tells you what you're likely to earn. The minimum tells you the worst that has happened to the fund in 5 years. The best tells you the best. So if I look at worst rolling return and average rolling return, honestly, in that single statistic, I get all my answers.
Okay. This is good insights. Thanks for this, Radhika. Before we wrap up, though, Radhika, I'd love to know, what I started off the conversation with, the reason behind a mango-colored sari once the mango season is over already.
So mango season is not over. UP still has some langras and chausas going out, and the sari is incidental. But yes,
No, but there's something related to mango, right? That you are writing, if I'm not wrong.
There's a mango announcement that was made an hour ago. I think I've always had requests to put all the financial wisdom nuggets, stories into something that is an easy money guide for investors. So we just announced the release of our new book, Mango Millionaire, that comes out in spring 2025. And I think the title is a tribute. To the what I call Aam Janta, the mango people of India. And India will produce so many millionaires over the next decade or 20 years. It's going to be a golden period. And so it's a guide to create more mango millionaires out of India. And we really, and it's supposed to be simple and easy with low jargon and not too many words like sharp ratio and stories and analogies that people can understand.
Okay, so I'm looking forward to this. You said this comes out in spring of 2025.
Yes.
So somewhere around April or May is when, or maybe March, April is when you would see the release of
Maybe
this.
when the Alfonso season, maybe it'll debut with the Alfonso season.
Not bad. So maybe we can do the debut with the Alfonso mango in our studio with the mango as the backdrop.
Done. Done.
Sounds good. We'll do that. Radhika, all the best and keep giving us your insights all through. Thanks so much for taking the time out and being with us today.
My pleasure.
All right, that's the view from Radhika Gupta. So look at 5-year rolling returns, and that is probably one of the best things to do. Don't complicate it too much. We slip into a break, but on the other side of the break, Anand Ladda Johnson, the founder of Invest Arch for Kal, we ask him about some of these mid-cap funds and some of the viewer queries that have come in. Stay tuned. All right, back with the mutual fund show. Let's welcome in Anand Ladda, founder of Invest Arch for Kal on the show. Anand, great having you. Been a while. Thanks for joining in. Hope all is well. Anand, we were talking about the mid-cap fund space, right? Because there are funds which have given consistent high double-digit returns or higher than teen returns as well for a period of 10 years odd. So that's not luck. There has to be a methodology why some funds can do what they do for such a long period of time. How do you identify, or what are your best practices for picking or choosing a mid-cap fund?
Hi, Neeraj. Firstly, thank you so much for having me on the show. Always pleasure speaking to you.
Thank you.
And a very interesting conversation because mid-cap space is always close to my heart. I have a very interesting data to start this conversation. If we look at last 5 years data, out of 150 stocks which are there in mid-cap space, roughly 20 plus stocks have moved on to the large cap side. So what has actually happened is the actual re-rating happens in the mid-cap side whenever there is a movement from mid-cap to large cap. Which is happening on a if we check out the percentage, which is happening on a large number of portion of mid cap stocks. So that is one thing because of which mid cap funds have given really superb returns. If we check out 5-year or 10-year rolling data. Firstly, if we check out 10 years data, there is only one incidence where return has been below 10%. Otherwise, usually returns are in the range of 14 to 18%. And in two incidences from period of 2009 to 19 and 14 to 24, we have seen returns of above 20%. So yes, they have delivered consistently good returns. I usually look at 4 parameters. Firstly, I look at are they consistent performers or not? I want that my selected fund should be in the top quartile for maximum period of time. At least 60% of the time, my fund should be in the top quartile or the in the top quartile of the total fund funds which are available in a particular category. Second is obviously rolling returns. We look out at the rolling returns of 5 years and 10 years to get a better perspective. Thirdly, we look at fund manager. We look at all the schemes that our fund manager is probably managing, and we check out that our fund manager is a consistent performer or not. And finally, just to check out risk, let me keep it very simple and not complicate it with any ratios. We just check out downside risk. Whenever market is falling, is my fund falling more than the index, or it is performing better than the index? It is a small criteria to look at, and these small 4 pointers will help you reach to a better fund in this category.
Okay. So may I ask you, Anand, and this need not be an all-encompassing, exhaustive list, but if you had to maybe tell our advisors that based on your parameters, and they will do their own own checks and balances, of course, but based on these parameters that you use, which are the 1 or 2 or 3 funds that might make it to that list? How much you invest and whether you invest now or later is a separate question altogether.
Let me give 3 different funds and 3 different which are investing with 3 different mindset. Firstly, if you are a investor who is looking out for a fund which is comparatively less volatile with comparatively better downside risk, probably Kotak Emerging Equity Fund is a fund which has delivered superbly from last 5 years, 7 years, 10 years, and it's a consistent performer. And even during bad days, this fund has consistently performed well. If you are looking out for an aggressive option, if you are looking out for a fund which is churning a lot, if you are looking out for a fund which is smaller than 10,000 crores of the AUM, then Edelweiss Midcap Fund finds its place. And if you're an aggressive investor and you want to take a bet at a new fund, probably White Oak Midcap Fund has performed really well. I know last 6 months has been a bit choppy for that fund, but overall, it has been a good performer and a consistent one.
Okay, so 2 of those funds that Anand Ladda likes, viewers, feature in that list that we have of the key performers as well, which is Edelweiss and Kotak. So if you are a low risk investor, then Kotak Emerging, Anand still likes it from a longer term perspective. If you are a medium a risk investor, then maybe Edelweiss, if I'm not wrong. And then if you can take a little bit of volatility and choppiness, White Oak Midcap Fund might be something that might suit your bill. He says that they've been that fund has been slightly choppy in the last 6 months, but he likes it for the long-term perspective. Okay, Anand, just with a bunch of queries really. So I won't be able to take all viewers, but let's try and take in 1 or 2 or 3 if we can. The first one, Anand, is from Mr. Khurshid. Mr. Khurshid is, or Miss Khurshid maybe, but age 60. Khurshid says that have invested 3 lakh rupees in Motilal Oswal Defense NFO, but the fund is not giving the desired return. What should I do? My time horizon is 1 year. Khurshid, maybe a thematic fund would not have been a good idea if your time horizon was 1 year, but I'll let Anand tell you.
Neeraj sir has rightly pointed out for you, by you, that investing in a thematic fund with a time horizon of less than 5 years is very risky. Plus, I feel this particular investor has chosen just this fund because this sectors, for example, defense as a whole has given really good returns in past 3 years. I feel whenever you are investing in any sector fund, you should always choose out that sector which is kind of underperforming and you are taking a contra bet, because this will kind of reduce your systematic risk. Right now in defense sector as a whole, obviously it is overvalued compared to the other segments of the market, and keeping this fund with just 1 year time horizon can be very risky. Probably if your time horizon is just 1 year, floating interest fund category is a category which you should be using. At least you should not be invested in a sector fund.
Yeah, and thanks for that. I hope that drives home the point, Mr. Khurshid, but excuse me for not knowing that, but the limited point being, I do know the right thing to do, which is that less than 1 year. I mean, where to invest is best, Anand, to tell you, but I know what not to do, which is not to invest in a thematic fund if your time horizon is 1 year or 1.5 years, because you know the theme may or may not perform. So I think that was a mistake. I hope you got your answer from what Anand told you. The next question is from Shirdinath. Shirdinath is 26 years of age, and the question is that should I pull back the liquid funds after 1 year, even if it doesn't give the expected return of about 7%? How long should one hold liquid funds? Shirdinath has been investing in the Edelweiss and Union liquid funds.
Whenever you're investing in any debt fund, you should look at 2 pointers. Firstly, you should look at the YTM. That is the yield to maturity. At what interest that particular fund is giving funds ahead. So probably if your time horizon is above 1 year, floating interest category or even low duration category is a better option because you will get better YTMs. At the same time, you should ensure that your fund's modified duration should be almost equivalent to your investment time horizon. If you're taking care of these 2 pointers and choosing a category which is above liquid fund, will give you better returns, especially in the present scenario where we expect that there might be some rate cuts in coming time horizons. So probably liquid fund might not be a better option for you to invest. You can choose low duration or floating interest fund. Just to name, it is not an advice. You please take care of the returns and please consult your advisor. But you can just look at ICICI floating interest fund, Kotak low duration fund, and you will get a gist of what I'm trying to explain. And you will probably understand better why those funds might give better returns as compared to a pure liquid fund.
I hope that helps you. And Anand, it certainly helped me because it was good to know about this insight of a 5-year, 10-year rolling return, something that Radhika also mentioned, and the fact that look at the YTMs when you're looking at the debt fund. So good insights. Thank you so much for that. And thanks for being on the show today.
Thank you so much.
All right. And with that, it's a wrap on this leg of the Mutual Fund Show. Stay tuned to NDTV Profit.